Hello friends, welcome to this new session on GST. This is with regard to the MCQs for December exam. Now let's move on to the questions. Now the first question here is, ABC Limited has provided the following information for the month of September 2018. Intrastate outward supply of 8 lakh, interstate exempt outward supply of 5 lakh, turnover of exported goods 10 lakh, payments made to goods transport operator or the GTA of rupees 80,000. It has asked you to find out the aggregate turnover of ABC Limited for the period. Now, if you carefully observe the definition of section 2 subsection 6 with regard to what is aggregate turnover, it implies aggregate value of all taxable supplies, including value supplied of export goods, exempt goods or services which attract nil rate of duty or tax, interstate supply between distinct persons, and supply on behalf of principal by the agent, and specifically excludes inward supply on which tax is paid under reverse charge mechanism, all GSTs and compensation cess. Now if we observe this definition carefully, then what is included is interstate outward supply of 8 lakh, interstate exempt outward supply of 5 lakh, turnover exported goods of 10 lakhs. That comes up to 23 lakhs. That is the answer. How is 23 lakhs means? Payment made to goods transport operator of 80,000 is an exclusion because in case of a GTA, it is an inward supply on which the tax is paid under reverse charge mechanism and hence not to be included in the definition of aggregate turnover, and hence the answer for this is 23 lakh. Now let's move on to the next question. Now, what are the factors differentiating composite and mixed supply? Hope all of you have studied section 8 with regard to what is a composite supply and what is a mixed supply. The nature of the two are, one is the bundling and the existence of principal supply. Hence the answer in this case is both A and B, that is both of the above. Now let's move on to the next question. Mr. A, who's opted for composition levy, supplies goods worth 24,300 to Mr. B and issues an invoice dated 25/9/2018 for 24,300, and Mr. B pays rupees 25,000 on 1/10/2018 against such supply of goods. The excess of rupees 700 that is paid by Mr. B, that is adjusted in the next invoice for supply of goods issued on 5/10/2018. The question asked here is identify the time of supply and value of supply. The options given to you are A, 25,000, that is the date of payment, B, for 24,300, that is as on 25/9/18, that is the date of issue of invoice, and 700 being the receipt of payment on 1/10, and C, 24,300 as on the date of issue of invoice and 700 as on the date of supply of goods. Or last one, B or C are the option of supplier who has opted for composition levy. Since you read in this question that Mr. A is covered under composition scheme, hence the answer in this case would be that he is eligible to either option B or option C, that is 24,300 as on the date of invoice, issue of invoice, and 700 either as on the date of receipt of payment or as on the date of supply of goods in the next invoice. Now, if you carefully read section 12 with regard to time of supply, section says invoice issued before or at the time of removal of goods for supply to recipient under the provisions of section 31 or date of which supply is received or the payment is received, whichever earlier date is considered for time of supply. Let's move on to the next question. Now, this is again a question with regard to composition levy. Now, what is the rate applicable under CGST to a registered person being a hotelier providing restaurant and accommodation services opting to pay taxes under composition scheme? Now, if you carefully observe under the provisions of section 10, a person who is eligible to get registered under composition scheme, he shall not be granted registration under the provisions of section 10, that is under section 10 subsection 2. It clearly mentions that if he is engaged in the supply of services, he is not eligible for composition scheme. In the question given here, it says rate of tax for a hotelier who is involved in both restaurant and accommodation services. If he was providing only restaurant services, he is eligible under composition scheme. Since he is also giving accommodation services, that is a service and not eligible for composition, and hence the answer here would be not eligible for composition scheme, thus liable to pay normal rate of tax. Now, the value of services rendered is rupees 1 lakh. Date of issue of invoice is 5th October 2018. Advance received is rupees 25,000 on 20th September 2018. Balance amount received on 7th October 2018. What is the time of supply for rupees 1 lakh? Now, the total value of services rendered here is 1 lakh. So we have to find out the time of supply in case of services. Now here, the time of supply of services also depends on one aspect. Here the question says that the person has received an advance amount of rupees 20,000. There was a notification number 40/2007, which was dated 30th October 2017, which said that as per this notification, for any taxable person whose aggregate turnover is less than rupees 1.5 crore and is not registered under section 10, that is as a composition dealer, then his amount of rupees, whatever is received as advance on that, the GST would be waived and he shall not be liable to collect on advance amount and on the final supply. Hence, in this case, the answer would be 20th September 2018, that is 25,000, and 5th October 2018 for rupees 75,000. Let's move on to the next question. There was a decrease in tax rate from 24% to 20% with effect from 1/9/2018. Which of the following rate is applicable if the supplier has not opted for composition levy? Now say there is a manufacturer called Sita Manufacturers in Delhi who supplies goods to Akash Electronics in Dehradun. This is an interstate supply. Further, goods were removed from its factory in Delhi on 31/8/2018, delivered at Akash Electronics, Dehradun on 2nd February 2018. The invoice is issued on 31st/8/2018 and payment is received on 4th September 2018. Now, what is the applicable rate of tax? The options given here are 20% as it is lower of the two, 24% as date of invoice and dispatch of goods from factory has happened before change of rate, and third option 20% as both the payment and completion of supply has happened after change of rate. Now, if we observe the provisions of section 14 with regard to what is the rate of tax when there is change in rate of tax, in this case the answer would be 24%, since as the date of invoice and dispatch of goods from factory has happened before the change of rate in tax, hence the earlier rate of 24% would be charged in such circumstances. Let's move on to the next question. Now, under the rules of valuation, Rule 30 of the CGST Rules, inter alia provides value of supply of goods or services or both based on cost and shall be dash percentage of cost of production or manufacture or the cost of acquisition of such goods or the cost of provision of such services. If you read Rule 30 of the Act says the value of supply of goods or services or both based on cost shall be equal to 110% of the cost of production or manufacture or the cost of acquisition of such goods or the cost of provision of such services. Hence, in this case, the answer is 110%. Now, question number 8. Mr. Santa, located in Nasik, purchases 10,000 Hero ink pens worth rupees 4 lakh from Lekhna wholesalers located in Mumbai. Mr. Mohan's wife is an employee in Lekhana Wholesalers. The price of each hero pen in the open market is rupees 52. The supplier additionally charges rupees 5,000 for delivering the goods to the recipient's place of business. The value of such supply will be, options given here are 5,20,000, 5,25,000, 4 lakh and 4 lakh 5. If you read the question carefully and if you have understood the provisions of section 15(1) with regard to what is the value of supply, it says whatever is the price charged by the supplier to the recipient for the supply of goods. In this case, what is the price charged? 4 lakh rupees. And additional cost that is incurred for supply is rupees 5,000 as delivery charges. Hence, that also is to be added to the value of goods, and hence the value of goods in this case would be 4 lakh 5,000. Now, the next question with regard to input tax credit. The question here is, input tax credit on capital goods and inputs can be availed in one installment or multiple installments. If you carefully observe provisions of section 16 with regard to availment of input tax credit, it says input tax credit can be availed on all inputs and capital goods in one installment only. Hence, the answer here is one installment. The question given here is, in case supplier has deposited the taxes but the receiver has not received the documents, is receiver entitled to avail credit? Now, if you have carefully read the provisions of section 16 with regard to the conditions for availment of input tax credit, section 16 subsection 2 clause A says that if a person is not in the possession of the documents such as invoices or as necessary for availment of credit, then he shall not be eligible for taking credit. Hence, in this case, the answer would be no, as one of the conditions of 16(2) is not fulfilled. That is, section 16 subsection 2 clause A says that if the person who is claiming ITC shall have the possession of the documents with him for availing credit. The next question. Now, in case of a banking company or a financial institution or any NBFC, the option of claiming eligible credit or 50%, only 50% credit, only eligible credit and 50% credit. Now, what does this mean? Section 17 subsection 4 of the CGST Act 2017 gives a special provision for a banking company or a financial institution or an NBFC which wants to claim input tax credit, which says that any banking company or a financial institution is eligible to take credit of the total value of inputs to the extent of 50% or opt the normal scheme. Hence, the answer here would be eligible credit, that is the normal scheme of claiming input tax credit, or 50% credit of the total input value. Yes. The next question. What is the maximum time limit for availing input tax credit? Now, the provision of section 16 subsection 4 says that the time which prescribes the time limit for claiming input tax credit, it says the two most important dates, that is the date of filing of annual return or the due date of filing annual return under section 39 for the month of September, whichever is earlier. Hence, the answer here would be C, earliest of the above two. Now, the next question is with regard to an unregistered person can avail ITC on stock if he applies for registration within the options given are 60 days of becoming liable to register under GST, immediately after becoming liable to register under GST, 30 days of becoming liable to register under GST, or cannot avail ITC on stock. That is, if an unregistered person has to apply for registration, then how many days are there for him to avail the ITC on the stocks available with him? The provision of section 18 says that the person, that is an unregistered person who gets himself registered, has the option of claiming input tax credit up to 30 days of becoming liable to register under GST. The next question is, what is the validity of the registration certificate issued to casual taxable person and non-resident taxable person? Now these are the two people who have to compulsorily take registration under the provisions of the Act. If we carefully read section 24, a casual taxable person and a non-resident taxable person have to get themselves registered if they have to supply goods or services within India. Then, as per the provision, what is the answer for that? The options given are 90 days from the effective date of registration, period specified in the application for registration, earlier of A or B above, 180 days from the effective date of registration. The provision says earliest of A or B above, that is either 90 days from the effective date of registration or period specified in the application for registration while taking the registration, whichever is earlier will be the validity of the registration certificate to issued to a casual taxable person or a non-resident person. Let's move on to the next question. The question is, can a person apply for registration to pay tax under section 10 for any of his business verticals at his choice? The options given are, let's read them. Yes, irrespective of the registration status of the other business verticals. No, all of his other business verticals will also have to obtain registration for payment of tax under section 10. Yes, provided majority of the business verticals are paying under section 10. And last option, yes, if all the business vertical in a state are obtained registration to pay tax under section 10. Now, if we have understood the provisions of section 10, it says that if a person has to get himself registered under section 10, that is as a composition dealer, then all his business verticals shall also have to be registered under section 10 as a composition dealer. If he does not satisfy the conditions as mentioned under section 10 for a composition dealer, then that is if he is doing an interstate supply or if he is doing supply of services, then he shall not be eligible for registration under section 10. Hence, in this case, the answer would be no, all of his other business verticals also should have obtained registration for paying tax under section 10. Next question. In case of goods sent on sale or approval basis, invoice has to be issued. Option given are, while sending the goods, another invoice has to be issued by the recipient while rejecting the goods. While sending the goods, but the recipient can take credit only when the goods are accepted by him. When the recipient accepts the goods, or 6 months from the date of removal, whichever is earlier. And the last option, when the recipient accepts the goods, or 3 months from the date of supply, whichever is earlier. The answer in this case, as per the provisions of the Act, it says when the goods are sent on sale or approval basis, invoice has to be issued when the recipient accepts the goods, or 6 months from the date of removal, whichever is earlier. A person who has applied for registration can, options given are, provisionally collect tax till his registration is approved. On applying for registration, if he has applied for registration within prescribed time. Second, neither collect tax nor claim input tax credit. Third, issue a revised invoice and collect tax within 1 month of the date of issuance of certificate of registration, subject to conditions, and all of the above. If you carefully read the provision with regard to registration, then a person who has applied for registration has the option of raising a revised invoice and collect tax within 1 month of date of issuance of certificate of registration, subject to conditions of the provision. Hence, the answer in this case is C, issue revised invoice and collect tax within 1 month. Yes, next question. The last date for declaring the details of a credit note issued on 25th June 2018 for a supply made on 19 September. Options given are 31st December 2018 being the last date for filing annual return, 20th July 2018 actual date for filing annual return, 20th Jan 2018 due date for filing of December return, and 20th October due date of filing of September return. If you carefully read the provisions of section 16 subsection 2, it says that the last date for declaring the details of a credit note shall be 180 days from the date of issue of such note. Hence, the answer in this case would be, if we calculate 180 days from the date of issue of credit note, it comes to 20th October 2018, and that would be the due date of filing of September return. Next question. What accounts and records are required to be maintained by every registered taxable person at his principal place of business? Options given are account of production or manufacture of goods, inward or outward supply of goods and or services, stock of goods, input tax credit availed, output tax payable and paid, or last option, all of the above. Answer is already given there. If we carefully read the provisions of section 35 subsection 1, which stipulates the records or accounts to be maintained by every registered taxable person under GST at his principal place of business, is all these records have to be maintained by the SSE. Hence, the answer in this case is all of the above. Let's go to the next question. The last question. The time limit to submit a report of the audit under section 66. Now, what is section 66? It is with regard to special audit which can be conducted on the advice of the assistant commissioner, either by a chartered accountant or a cost accountant. The options given here are, let's read the option then find out the answer. Within the period of 90 days without any extension of time. Within the period of 60 days without any extension of time. Within the period of 90 days, the assistant commissioner may, on an application made to him in this behalf, or for any material and sufficient reason, extend the said period by another 90 days. Now, the provision of section 66 with regard to special audit says the answer would be within the period of 90 days, the assistant commissioner may, on an application made to him in this behalf, or for any material and sufficient reason, extend the said period by another 90 days. I hope all of you have understood the MCQs. Thank you for watching. Please subscribe to our channel. Thank you.